Hey Parallax traders, this is Imri and I'm back with another video on technical analysis. Today's video is about candlesticks. Should you use them? Should you not use them? Are there any alternative charts? And what's the big deal about these candlesticks anyway? So I'm going to start off by saying that most of the time when I'm looking at a price chart, I prefer a monochromatic scheme, except for, I like to use blue for trend lines. That's just personal preference, whatever. But I like to use open, high, low, close bar charts. And I like them to be black just to keep things as monochromatic as possible. It's just personal preference for me. The reason I like bar charts when I'm doing my Elliott Wave analysis is because, frankly, in my opinion, it's simply easier to count waves with a bar chart. As soon as you switch to a candlestick chart, there are these wicks, and they just throw the chart off visually for me. That being said, I know a lot of people that can count waves very successfully using a candlestick chart. So there is no right or wrong answer here. The point I'm trying to make is that you should be very much aware and educated about the kind of data that your personal chart type or your preference for a chart type gives you. Now, an open, high, low, close bar chart gives you the exact same information as a candlestick chart. That information is just presented a little bit differently. Visually, candlesticks have those very distinctive looking wicks, but in my opinion, they look messier on a price chart, hence my preference for bar charts. Now that I've gotten that out of the way, I want to talk about one of the big advantages that candlestick charts have, and that is it just makes it a little more easy to see on the chart visually what kind of pattern we are dealing with. Now, this is where I get a little bit peeved when I start talking or hearing other traders talk about candlesticks. I think candlestick patterns are phenomenal. They're great. The problem is that most people don't really know how to use them appropriately. Now, so when we start learning basic technical analysis, we start learning the names of all these fancy candlestick patterns, doji candles, hammers, shooting stars, engulfing bars, what have you. And it's great to know the names of those patterns, but what's more important is understanding the significance of what they're actually trying to tell you about the market's behavior. Now, here's the other thing. Looking for candlestick patterns in isolation is not all that helpful, in my opinion. I think it's far more helpful to be able to place those candlestick patterns into a certain kind of framework. Now, of course, my framework is Elliott Wave Theory. And when I place candlestick patterns within the framework of the wave principle, or Elliott Wave Theory as it's also commonly known, then those patterns start taking on a lot more significance than they would if I was just looking at a random pattern somewhere on the chart. So I'm going to explain to you, we're going to go through three charts, and on a lot of these, we've either called out trades or alerted subscribers to danger in the market. We have a very active Discord community that I'm incredibly proud of. So if you want to check out the Discord community, please just leave a comment on this YouTube video and I will send you an invitation link completely free. All right, so before I jump into candlestick patterns, I just want to show you guys some of the trades that we've been calling out for our Discord community. So we've been pretty active in April and May. We've taken a trade on Aussie dollar, dollar Swiss, dollar CAD. And in May so far, we've taken two trades, one on dollar yen and one on Kiwi yen. And all of these trades have, I'm not going to say we're going to be able to keep this up indefinitely, but so far all of these trades have played out incredibly well. We've captured hundreds of pips, many percentage moves in the currencies. And I'm very happy with the work that our team is doing. So coming back now to candlestick patterns. All right, so I like to look for significant candlesticks or candlestick patterns as a corrective wave is coming to an end or as an impulsive wave is coming to an end. So here's a trade that we called out on dollar Canada. All right, the proposed entry that I actually was talking about was right in this gray box right here. Okay, so I counted an impulsive wave 1 up. And that means I can expect a steep wave 2. And once that steep wave 2 is finished, then we can expect a very explosive third wave to the upside. Now, I wanted to get us positioned for that third wave, which tends to be the most explosive, strongest wave within an Elliott wave cycle. So first things first, the context that I'm looking for is, well, a second wave will take the shape of a three-wave correction, A, B, and C. So we need three waves down. I know that where I just placed that label A, I know that the correction's not done there because visually this is just one wave. And then we have our wave B up here. And then we have our third and final wave, wave C. Okay, so once we have three waves in place, and we can also combine other indicators like Fibonacci retracements, for example. Look at that. We're finding support deep into the heart of the first wave, right around the 78.6% Fibonacci retracement level, in fact. And we can also look at momentum signatures. Look at how the relative strength indicator, RSI, is also oversold at this place. All right, so I'm not just looking at the candlestick pattern. There are other supporting tools that we can use. Now, what happens next is really interesting. I'm going to look for a candlestick pattern that tells me or suggests to me with a relatively high degree of confidence that the market is getting ready to turn. So here we have this black, which is a bearish candle with a long lower body. It's a wick. This means that the bears did not close this candle on the lows. There was some buying pressure that filtered back in. We saw the same thing with this candle here. The difference is that the following candles that appeared after this candle have small bodies, right? Doji candles, as they're called. They're also called indecision candles. And I would also call this candle an indecision candle. Now here we have signs of the bulls fighting back, and they're buying the market. They're going long dollar Canada. And then boom, here's where we get a very nice bullish candlestick. Notice how we have a lower body, but we close very much near the highs of this candle. It suggests that there was strong buying presence over the entire 4-hour period it took for this candle to form. So we can use this candle as a supporting piece of evidence that the ABC correction for wave 2 is complete, and we can look for higher in wave 3. And now we can use Fibonacci measurements to target where we might expect wave 3 to end. So I would look for wave 3 to typically end somewhere between 138.2% and 161.8%, the distance traveled measured between waves 1 and 2. Right? So I'm using the trend-based Fibonacci tool here in TradingView, where we need 3 points of contact: the start of wave 1, the end of wave 1, and the end of wave 2, and that gives me these Fibonacci measurements. So you can see what happened as we reached one of those high probability targets for wave 3, we got a bearish engulfing candle. And we have bearish RSI divergence, right? So there's so many tools, supporting tools that we can implement alongside the wave principle to give us a hint or a clue that maybe we should start protecting our trade. Maybe we should take profits off the table. Maybe we should do something, right? Or maybe not, if that's part of your trading plan. It's all good. How you trade is entirely up to you. And then we got a fourth wave correction, which ended up being a flat. Okay, it's a classic Elliott Wave formation, one of the core Elliott Wave patterns. And what happened as this flat correction completed? We got another indecision candle. Look at this scary looking bearish candle, trading right into what a lot of traders would consider technical support right here. We got basically a candle with no body at all, a tiny indecision candle, and then another bullish engulfing candle. And then prices started trading higher in wave 5, which brings me to where we are right now. This is starting to look scary. We have RSI bearish divergence, and we're getting some candles with long upper wicks and small real bodies. That tells me that it's very possible that this fifth wave is nearing an end and that we could expect the market to roll over. I haven't seen a super bearish candle quite yet to confirm that, at least not on the 4-hour time frame, but it's worth keeping an eye on. Next example, Aussie dollar. This time we're going to be looking at a daily chart. Now here, I want you guys to focus on this 3-wave corrective pattern. We didn't take a trade on this currency pair. We haven't called this one out in particular, but it's such a good example that I really want to share it with you. So we can see the expanded, this expanded flat for wave X of a complex correction nearing completion. And What happens as it nears completion? Well, we get RSI almost kisses the overbought level, but what's really cool here is that we get this long wicked candle. And although the candle closed bullish, that long upper shadow definitely suggests that there was some bearish pressure. And then we get this bearish candle immediately afterwards. All right. Now, if that didn't give you confidence to sell because this candle had a little bit of a lower body, meaning that bears could not close this candle on the lows, well, this would be another great supporting candle to get into to then use that to get into this trade potentially. Right here we have on a lower time frame, this would be a 3-wave ABC correction, right? And then boom, we get immediately a bearish engulfing candle. And then the market continues to sell off. By the way, if I'm getting these terms for the candlestick patterns wrong, I don't care. The name of the pattern is not important. What's important is what the pattern is telling us about how the market is behaving. All right, so when we look at just candles anywhere, we'll always see engulfing candles, we'll see doji candles, we'll see candles that fit the core pattern of candlestick formations that most people learn right off the bat when they start discovering technical analysis. You'll find those candlestick patterns everywhere, but without context, they're not all that meaningful in my opinion. So I want to be looking for these candlestick patterns in areas where I can expect a turn in the market. And I use the wave principle to help give me that framework. I use things like the RSI indicator to help give me supporting evidence. And then I can use Fibonacci measurements. And finally, the actual price bar pattern. So the final example here is going to be on Bitcoin. I want us to take a look at this fourth wave here. By the way, if you were part of our Discord's premium community, you would have been alerted to the fact that we were expecting a significant decline in Bitcoin. We called it out days before it happened. Why? The wave principle told us what to expect. Anyway, so this is an ABC correction, 3-wave correction with a triangle wave B. And what happens as wave C is finishing? Well, again, RSI is getting overbought. We see a series of indecision candles followed by a big bearish candle here, signaling very clearly that a potential shift in trend is now underway, and we can see how the market has then been led lower. So candlestick analysis can be very valuable. It can be a very valuable complement to Elliott wave analysis as well. The important thing here, the key takeaway from this video is knowing when to look for those candlestick patterns. Look for them towards the end of waves, whether it's a corrective wave or an impulsive wave, doesn't matter, but it's towards the end of these waves, these high probability areas on a price chart where we can expect the market to turn, that these candlestick patterns typically hold the most significance. Thank you, traders. Stay safe out there. Talk to you next time.